we've got another important market voice who's joining in right now. Chakri Lokapriya is here with us. He's the Managing Director at TCG Asset Management. Chakri, thanks very much for taking out the time and good morning to you. We're in the midst of the earnings season, and that's probably something that's going to take center stage till the end of the season now. How has it shaped up for you so far? What has been the positive and negative surprises that you've seen?
But I'm told Chakri Lokapriya is back, and I think he was in the midst of giving an answer to us.
Yeah, with regards to earnings only, and where exactly were the positive and the negative surprises that he's seen. And since we were on the topic of Radico and United Spirits did within this pocket, and now Chakri, what's the gauge like in terms of earnings performances?
Yeah, earnings have actually kind of been along expected lines, which is commodity costs in the year have been higher, and therefore it has impacted margin. And this is a trend which is being seen across sectors, whether it's consumer, industrial, name it. Volumes have been okay, but the commodity pricing pressure has not been able to pass on to the consumer, which indicates a lack of pricing pressure and a weak demand. So I think that is a trend that we are likely to continue to see, at least in this quarter's results, with commodity prices coming down. Commodity means across board, whether it's metals, oil, related oils which impact the FMCG industry, etc., are all coming down sharply. And therefore, the earnings will revive, or rather the margins will look better in the coming quarter.
Chakri, the last few days, some of the consumer durable names seem to have caught a bit of excitement. None of the results have come out thus far but for Havells. But is it the performance of Havells that is leading to a Voltas, a Symphony and the others run up ahead of their numbers? And what's their view on this pocket?
If you look at the Voltas segment, they are facing exactly the same pressures, which is commodity costs. Commodities of all types were high last year and last quarter rather. And they're also very volatile. So companies would plan their inventory or their raw materials or their selling price properly. And second, this is an industry which is continuing to see very strong price competition, including the cable consumer. You've seen that cables actually have not been able to improve margins that much. Now, paying 40 times for cables is a good company, all that, but I see little value in trying to buy a company at 40 times. And therefore, companies like Voltas also are unlikely to see a meaningful increase in stock prices in the coming couple of quarters because of that.
Within the consumer space, I mean, and when we're talking about names like Pidilite, which reported numbers, disappointing the street, but their valuations also, while they're lofty, they really command a heavy premium and therefore they need to deliver. But do you see this as an aberration, or probably this could mean some uncertainty for the medium-term earnings outlook?
I lost the first part of your question. Could you please repeat?
I was talking about consumption names and how they need to deliver because of the steep earnings, steep valuations that they command, and how they actually need to really meet and beat the street expectations when they report numbers. I'm with reference to Pidilite that reported numbers and disappointed on the margins.
Indeed, Pidilite is again a good example of, you could see that the industrial segment was lower than their consumer segment. And in both cases, their margins are not strong enough, or margins actually fell down. So again, this backdrop, it's indicative of both, the end industry, whether it's the real estate industry, or all forms of consumption industry, which are still weak. And companies like Pidilite will benefit only if demand picks up, and these are still early days because we don't see demand picking up yet.
Okay. Chakri, looking at the kickoff with some of the pharma names when they start coming out with their earnings performances, today being Biocon, well, what is the anticipation from the larger names?
I think a couple of the larger names, it's only Dr. Reddy's where there's any degree of an anticipation that the earnings will be related. And this is more individual specific. It depends upon the number of product launches that they have going forward. And from that perspective, I think both Aurobindo and even Dr. Reddy are well placed. But outside outside of that, the sector will benefit from a reduced pricing pressure, which they have faced from the U.S. If you look at the generic pricing pressure negotiations with the U.S. PBMs and the healthcare industry, those are kind of eased, which is good news, incrementally for the pharmaceutical industry.
Okay, Chakri, we'll leave it at that. Thanks so much for taking the time out and joining us today. Look forward to having you in our studios the next time. It's always better talking to you out here, but thanks so much for joining in today.
Indeed. Thanks so much. Thanks for having me.